Investing your first $100 can be an exciting and rewarding experience, but it can also be a bit daunting if you're not sure where to start. With just a small amount of money, you may be wondering if it's even worth it. But the truth is, even a small investment can grow over time and help you reach your financial goals. So, imagine taking your first step towards building your wealth and securing your financial future with just $100. By making the right investment choices, you could potentially see that $100 grow into a significant amount of money over time. And who knows, it could be the start of a successful investment journey that leads to financial freedom. We have 4 tips for you to invest your first $100. Investing in yourself. Do you want to improve your life and achieve your goals? Well, there's no better way to do it than by investing in yourself. Investing in yourself means taking the time and effort to improve your skills, knowledge, and personal growth. It's about becoming the best version of yourself, and it's a smart investment that pays off for a lifetime. Investing in yourself can take many forms. It could be taking a course or class to develop new skills, reading books to expand your knowledge. If you want to achieve your goals and live a better life, start by investing in yourself. Take the time to develop your skills, knowledge, and personal growth. It's an investment that pays off for a lifetime. And the best part is that you can start with just a small amount of time and effort each day. Investing in gold. Investing $100 in gold can be a wise decision for those looking to diversify their portfolio and protect their investments against inflation and market volatility. You can choose to invest in physical gold by buying gold coins or bars from reputable dealers. Physical gold comes with the risk of being stolen or lost, but it provides a tangible asset that can be stored in a safe place. Alternatively, you can choose to invest in gold ETF or gold mining stocks. ETF provide exposure to the price of gold without the need for physical storage, while gold mining stocks offer potential returns from the profitability of gold mining companies. Investing in gold comes with low risks, including volatility in the price of gold and the potential for lower returns compared to other investments. However, gold has historically been a valuable investment during times of economic uncertainty. Investing in stocks. Investing $100 in stocks can be a great way to start building your investment portfolio. However, it's important to understand the risks involved, and the potential. Investing in stocks is inherently risky because the stock market can be volatile and unpredictable. Stocks can experience sharp price fluctuations, and individual companies can perform poorly, which can lead to a decline in the stock's value. However, with risk comes the potential for higher returns. Historically, stocks have provided higher returns than other types of investments, such as bonds or savings accounts. Over the long term, the stock market has returned an average of around 10% annually. Another option is to invest in individual stocks. However, this can be riskier, as the performance of a single company can have a big impact on your investment. It's important to do your research and only invest in companies that you believe have strong potential for growth. Investing in cryptocurrency. Investing in cryptocurrency can be a fascinating and potentially lucrative opportunity for investors. With the increasing popularity of digital currencies like Bitcoin, Ethereum, and Dogecoin, many people are interested in investing in this new asset class. One of the biggest advantages of investing in cryptocurrency is the potential for high returns. Historically, many cryptocurrencies have experienced massive price swings, with some increasing in value by hundreds or even thousands of percent in just a few months. However, this also means that investing in cryptocurrency can be very risky, as the market can be volatile and unpredictable. Before investing in cryptocurrency, it's important to understand the technology behind it and the risks involved. Cryptocurrency is decentralized, meaning it is not controlled by any government or financial institution. It uses complex encryption techniques to secure transactions and create new units of the currency. Overall, investing in cryptocurrency can be an exciting opportunity for investors, but it's important to do your research and understand the risks involved. With potential for high returns but also significant volatility, it's important to invest only what you can afford to lose and to practice caution when entering the cryptocurrency market. I hope this video helped you. We'll see you in the next video. Thanks for watching.